What is going on, everyone? Hope you all are doing well. And in this video, I'm going to share my thoughts on Cleanspark's earnings report and conference call. I talked about this company a few days ago, and now that earnings are out, I want to share both the caution flags and the significant news that I saw from the company a couple of days ago. But I don't want to waste your time, so let's go ahead and dive right in. Okay, so before we get into the actual earnings report, let's talk about price action. Cleanspark hit a multi-year low of $3.75 back on July 26th. But on Wednesday, the stock went on an absolute tear after earnings, reaching a high of almost $6. Now, if we were to look at Bitcoin, this kind of run doesn't make sense. But I will cover the news that probably triggered this significant move. But let's go ahead and talk about the actual numbers from Cleanspark this past quarter, because in my opinion, I think it was a mixed bag. First, when we look at their revenues, they only generated $31 million, and analysts expected $36 million. So that is a double-digit miss right there. Now, even though they missed on revenues, I think many of us expected it was going to be a bad quarter. In the first 3 months of the year, they mined 898 Bitcoin, and these previous 3 months, they mined a total of 964 Bitcoin. But in the past 6 months, Bitcoin prices have been cut in half. So the revenues were expected to be much lower than the first 3 months. However, I think it is important to know that the amount of revenue generated this past quarter was still an increase of over 240% from the previous year. So putting that into perspective, the revenues were not that bad. Now, one thing that sent the stock on a massive downward move right after the earnings was their huge net loss. They increased their net loss to over $29 million, which was substantial. However, I think it is important to note what actually contributed to this loss. First, they discontinued their energy business operations. I will talk more about this later, but by discontinuing operations, they had to take a loss of $10.6 million from their energy assets. With that being said, it is important to note that this was a non-cash impairment, so the balance sheet was not severely impacted for the quarter. In fact, because they discontinued the energy operations, they're actually saving 80% of the cash burn, which is substantial. The other major loss is from the realized losses from their Bitcoin and the impairment of Bitcoin on the balance sheet. They lost about $10 million between the two. So if we put both of these together, they lost a total of $21 million. And this is why I think the more appropriate measurement is adjusted EBITDA. Now, I expected them to be close to break even, but they did much better than I expected. Even with lower margins, they were still able to generate $15 million in adjusted EBITDA. So while Bitcoin remains low, their overall business still continues to be successful, which is so nice to see. Now let's move to the balance sheet. They did lower the amount of cash on the balance sheet, but that is not their main currency for their business. They use Bitcoin. And because Bitcoin prices are much lower than last quarter, they also have less funds through their Bitcoin, even though they have 140 more Bitcoin on their balance sheet compared to last year. So this is going to be something I keep an eye on, especially if Bitcoin remains at current levels. However, they still have significantly low liabilities, even with $18 million in debt. But even with the smaller balance sheet, they have still been able to execute on expanding their Bitcoin mining services. In terms of hash rate, they went from 2.3 exahash to now generating 2.9 exahash. This makes them the 4th largest Bitcoin miner in terms of hash rate for North America. So they're proving to execute on their vision of being a top 5 miner. However, this news is nothing in comparison to what they announced the morning before the earnings. On Wednesday, they announced that they are acquiring their 3rd Bitcoin mining facility in Washington, Georgia, that will add an additional 1.1 exahash to push them up to 4 exahash for the current quarter. Now push them up to the top 3 in terms of hash rates. They also have the opportunity for future expansion at the facility for another 50 megawatts. This will add another 1.55 exahash. Now, I want to talk about this deal because honestly, some people that follow this company don't understand what is actually going on. In their conference call, they announced that the deal is worth $25.1 million for the land, infrastructure, and machines. Now, the payment is $5.3 million of debt for the seller finance note and assumption of a mortgage. The rest of the consideration will be paid in cash. Now, the question is, how did they come up with the cash? Because last quarter, they only had $2 million in cash and almost $7 million in accounts receivable. And this is where I need to specify that they purchased the facility through debt and equity. On July 1st, the company issued 5.8 million shares under their at-the-market offering to raise a total of $24 million. So they increased the number of shares outstanding from 41.3 million to 47.1 million. But even though there was dilution, we need to consider the reason for it. By doing this offering, they are able to grow faster and more before the end of the year. This acquisition will easily make up for the dilution that has occurred this past month. And here are the results from the acquisition. They are now raising their expectations for hash rate from 4 exahash to 5 exahash by the end of this year, which is a 25% increase. Now, given the current economic times we are in, where companies are reducing expenses, for Cleanspark to raise guidance is really nice to see. Plus, speaking of companies companies reducing expenses, Cleanspark is taking advantage of this when it comes to their miners. They are focusing much of their attention on buying miners on the spot market. And I think that this is a fantastic move over buying miners for the future. When you consider current Bitcoin prices, many Bitcoin mining groups are struggling to make money because of the high energy costs and facility use. So if businesses are losing money, they will need to sell their miners or else they will burn more cash. And what does this mean for Cleanspark? They actually get to buy miners that are distressed, which means that they can get them for a better price. And this is why I believe they are able to execute on growing hash rate despite the recessionary environment. Several other Bitcoin mining companies have cash locked up for years, but now Cleanspark can buy the same miners at a discount, which is significantly going to help them in the near term. And this is why they've also grown their guidance for the 2023 hash rate to 22.4 exahash. Now, one of the pieces to help them grow this much is their Lancium contract. This contract is for 500 megawatts total, and 300 of that is optional. But this is where I need to share a caution flag that I see. The first 50 megawatts that were contracted have been delayed to now likely go live in the beginning of 2023. Now, I'm not saying that I don't think that the contract won't be fulfilled, because I do think that it's going to happen. But I think that the pace to get to 22 exahash could be extreme, especially if we see another delay. About halfway through the conference call, they've talked about the struggles that have occurred in Texas when it comes to the uptime. And the Lancium facility is in Texas. Bloomberg announced in July that the Texas power grid is near brink as the large Bitcoin miners have shut down because of high demands. If this continues, how will Lancium be able to supply the power necessary for Cleanspark operations? I do believe that they will be able to receive their initial contract of 200 megawatts. But I think we also need to consider the issues going on in Texas and how the Lancium contract could be affected. Now, I do think that Cleanspark recognizes this, because in their conference call, they said we do expect to further expand our wholly owned facilities beyond what we have done today. And we would then add those in, and we may pass on the optional contract or do both. One thing that the company has said is that they want to maintain holding wholly owned facilities for the future. And so even though this Lancium contract will help them with scalability, I can see them purchasing more facilities soon. When we look at the other Bitcoin miners, many of them are focusing on trying to acquire as many miners as possible. But now we are seeing many of them struggle to actually put all their miners to work. Especially after what we're seeing in Texas, it is important for Bitcoin mining companies to put more attention into infrastructure over the miners themselves. If they don't have the space to plug in the miners, those miners are likely to experience damage because they are inactive and are in storage. For Cleanspark, they not only have a healthy amount of Bitcoin miners to where they can plug almost all of them in, but they are constantly looking for more opportunities to obtain facilities. And what I think a lot of people aren't considering is the possible appreciation that could come from these facilities. They can rehab them and install more miners that can increase the value of the property itself. As someone who is a real estate investor, there is a process called the BRRRR, which stands for buy, rehab, rent, refinance, and repeat. When they go to refinance the property, they can take cash out of the property to put toward more facilities or even miners. So I see tremendous opportunity for them on the real estate side of the business as well. Lastly, I want to just touch on them selling the energy side of the business. Now, this of course was to be expected. However, they have not sold this business yet. As I said earlier, the team placed about $10 million in discontinued operations for their energy business. Now, even though this is a conservative price, we cannot expect them to sell this energy business for too high of a premium. The segment is a cash losing business, so there are not a lot of people that will want to buy this business in this kind of environment. But here is what I think everyone should consider. Even though they don't get to sell it for as high as they possibly could later when the market is better, time is also money in the Bitcoin mining business. So for every month that they don't sell this business, that means that they are losing more opportunities to buy more miners and obtain more Bitcoin. Plus, removing this business, as I said before, will help complete the cash burn that they are still experiencing within this segment. And this is why I would rather them just sell the business as soon as possible, even if they don't get the top dollar that they are looking for. Okay, so with all that said, where do I see this company going over the next year and a half? Well, for starters, I do think that they can achieve 22 exahash by the end of 2023. However, with all of my estimates, I tend to be more on the lower side. So I'm expecting the company to have 18 exahash by the end of 2023. And as the difficulty rate increases, I can see them growing to about 45 Bitcoin per day. Now remember that this will be at the end of the year, so they won't be generating 45 Bitcoin a day at the start of 2023. Now over the year of 2023, I'm expecting them to produce on average about 32 Bitcoin per day, with the average Bitcoin price being roughly 55K. So using these numbers, I'm predicting the company to have roughly $642 million in revenue. Now, in terms of expenses, the company has done a great job keeping their expenses low, especially energy costs. And so I'm anticipating them to have about $575 million in expenses. That may be high, but as I said before, I like to be conservative. Energy costs will continue to go up and they will need more facilities. So this will give them about $67 million in earnings. Now, as time progresses and debt becomes more difficult to get, they will need to move toward equity. And so I'm estimating about 10 million new shares per year. That would mean by the end of 2023, they would have about 62 million shares. So the earnings per share, or EPS, is about 1.08. I do believe that over the next year or so, the Bitcoin miners will show that they can demand a higher PE. And even though I believe that it should be higher, I'm estimating that the sector will demand a 30 PE as investors are still trying to determine how Bitcoin mining companies should be valuated. Now, as time moves on, I do believe this number will increase as Bitcoin prices increase and therefore margins increase. But for 2023, with a 30 PE, Cleanspark should be valued at about $32 a share. That would be roughly a 5x from the current prices. But I want to be very clear that these are simply just my estimates. So please run your own numbers to determine what you feel is appropriate. But those are my thoughts on Cleanspark. Hope you all enjoyed this video, and if you did, smash that like button. That helps more people see this kind of content as well. Also, don't forget to sign up with Moomoo, where you can get up to 7 to 10 free stocks depending on how much you deposit to the platform. And if you're new here, hit that subscribe button and notification bell. That way you are notified when new content comes out. Hope you all enjoyed the rest of your week, and I'll see you in the next one.